Okay, guys, we are back at it, and we are about to talk about how to use the free floats. And I use the free float in a way some people might not use. Everybody does trade a bit differently. So I'll explain how I use the free float, what it means to me, how I'll break it down for beginners, and how I match that up with the technicals to find the next best incoming trend. Let's just get right into it. So we will use our y'all know the rotation. Y'all seen all the videos. Y'all know the rotation. IPO, the 52-week low to most active, the top gainers. These stocks come out at the IPO. Now take note that the IPO doesn't really have much stats or much charts or anything to go off of. They still IPOs. They haven't dropped just yet, but they are about to, giving you something to look forward to, right? You know the new hottest stocks come out to the market, but as you know, that stock is going to come out as its IPO, do its time out in the market, whether that be a short time or a long time, and eventually go down to its 52-week low. That's usually a shorter time than longer. Probably take a couple days, probably a couple weeks, and then people get bounces in between because they usually just continue to downtrend until they hit their ultimate 52-week low, along with the market conditions that we'll talk about in the next lesson. If you want to see that, get subscribed for more so you don't miss out on any updates, any analyses, and any early seats. When these stocks go down to their 52-week low, they'll start to build support and or come in for that reversal. As you can see, that's what it's all about, right? Getting that thing at the bottom, getting it while it's oversold, not while it's overbought, but back while it's oversold, getting bullish divergence. The free float can be an easy determiner on the incoming trend, on the incoming type of trend that stock can make. For example, if you have a big free float, that stock can still uptrend. As you know, if you see my last how-to video on how to read the value versus your average value versus your free float, how to match that up with your technicals to find that next best incoming trend. Then you know you want your volume to pick up over the average volume and then match up with that free float. And I'll do that free float. For this example here on the AIFU, it'll take a little bit more volume. This has a 50, in fact, a lot. It has 56 million on the free float. What's the easiest way for you to think of the volume versus the free float for your active trades? Well, picture your free float being the cup size, right? It's a big cup size for real. That's a 56 million. They're gonna need a lot of water, bro. And on average, they only getting a water of 551,000. That's that on average, they ain't getting nowhere near that free float at all. They're not even getting a million. They're getting half a million. And they need to get 56 million. In the last trading day, they got a volume of 470,000. They got a water size of 470,000. Now we can see that volume starting to pick up and get closer to that average volume, looking very good. Those numbers are right. And you can go down to your 15-minute chart to see they are starting to come in for the next round of bullishness. If you recall my last how-to volume video I just made right before this, well, you know that a low stat stock and or that low volume is going to make your chart look a bit choppy. It's going to have those low dots on there. Those low dots and small candlesticks, those are still volumes, candlesticks. Just candlesticks with little to no volume at all. The more solid the candlesticks, the more appealing it can come. The more appealing it'll look, and the more safer and solid it can seem. But I'll tell you something about volume. It doesn't have to be big to continue that uptrend, as you can see for this example here on AIFU. If it has that big float, as that volume picks up gradually over the course of time, it will still uptrend. Now, let's say that you got a stock that's a low float. Some of these are big. We see some 62 millions, right? We see a 1 million here. Let's say you got a low float of 1 million. You got an average value of 865,000 and a current value today in the last trading day. Remember, you seen last video, value was only for that last for that current end or that current day at the time that you're looking at the value. In the previous days, notice how this stock took such a mean uptrend from about $5 up to about $7. The previous day before yesterday, it got even more value on XTIA. That was over about a million in value. I know because I'm actually in XTIA. And I'll show you this just because it's appealing to me because it's the stock. It's just still on the 52-week low list, so it's the next stock in line to explode, of course. But they're picking over a million value, so you see your candlesticks getting more solid. Notice they got a free float of 1.01 million, making it, and it's coming in for those moves. A very bullish day for that stock. Down here at 52-week lows on that day, yesterday, or not yesterday, the day before yesterday, was getting over a million in value and outdoing its free float. And it was looking like that from $5, $7. Just a quick example of what a low stat and low float stock can do when that float gets filled. Now, keep in mind, this one is already up to like $5, $6. So a lot of penny stock traders wouldn't be so excited for that one. And they did just do a split as well. But they will be excited for things like, let's say, GCTK. GCTK's float isn't too big on there. They got a medium cup size, okay? I just showed you, remember, a free float, a cup size of 56 million. I just showed you a free float, a cup size of 1 million, a small cup size of 1 million, and now I'm showing you a medium cup size of 11 million. But notice GCTK's value, on average, they get a value of 1 million. Lately they've been getting a lot of value outdoing the average value, and they value does their free flow very often, too often. So they stock does this almost every day. Check this out. They stock does that almost every day, as that volume comes to outdo that free float almost every single day. Why is that happening every single day for those bounces, you ask? GCTK has made it down to its, let me zoom out and show you. I don't say something down to its 52-week lows. So people are excited. That's why you see coming in for all those spikes that you're seeing. Big spike, like I say, day after day. It's easy to feel the float, and people like a stock that's easier to feel. A free float of 11 million. Oh, yo, all we got to get some pre-market day traders to wake up. Oh, we good. Get the quick spike in there. Do the day trade, and they know that they're gonna do the day trade because they are used to that thing coming in for those day trades for spiking in value. Now getting up to 565 million in value makes it a very active time. One thing about GCK is about to do a reverse split. Remember, if it's at that penny, it's out of compliance. They can get a NASDAQ compliance notice. They'll come in for a shareholder meeting. They'll do a reverse split. But before then, it's easier to get quick spikes in that stock if you have the low float stock. That float will get filled and make spikes happen into that stock. I can show you, let's see if I can show you another example. I think I can think of a low float off the top of my head, maybe some SOBR. SOBR has a very low float, a low float of 660,000. I am not in SOBR. They have a free float of 660,000. Notice the average value, 266 million. With a free float of 660,000, this stock, that float gets filled when that volume picks up, and they make those massive spikes. If you're looking forward to a low float stock, it'll be easier to come in for those spikes. Now, that doesn't mean that's just about to come in for a bull run every day. But on the days where volume is about to pick up and it's about that time, and it's a low float, you will get a spike versus, let's say, a stock that has, versus a stock that has a bigger float. Like this one here, I got 264 million in the float. Harder for them to come in for a quick spike, as you can see, but they'll come in for a gradual uptrend if that pressure can continue to stay added. To stay on that uptrend, they will need to keep that pressure added in there throughout a couple days and stuff. As that pressure starts to slow down, people get nervous and want to sell off. These stocks get big, like the big things like the Nvidias and your Teslas and stuff like that. Notice they got free floats. The massive cup size is 280 billion cup size on Tesla. 23.44 billion on NVDA. You'll never see those cup sizes get filled. And if you notice that when they stocks move up only 3%, that's a big gain for them off of small candlesticks. Those floats don't get filled on those stocks. You will never see those in the bigger stocks like that get filled. That will not stop them coming in for a trend. Especially since most of the people going in for things like that are because these are at much bigger prices. They like to go for their options trades, which we'll talk about in the next lesson. And if you want to know some more about advanced technical trading and stuff like that, you can join me in my 24/7 live trading classroom where I'm doing this live 24/7 with all the buy and sell signals, telling you when to buy and when to sell, giving you your target and resistance points off 15 and 1 minute chart. Just follow along with the trend. I do have this live on my YouTube Shorts feed as well, off of our 1 minute chart, giving you buy and sell signals with resistance points. You can use that as well to your advantage. Join them along in the main chat. They're doing this all day. I'll see y'all in there, and happy trade.